Palantir stock is up a whopping 152% year to date in 2025. Many AI stock investors have picked Palantir as the obvious winner in the rising effectiveness of artificial intelligence and how it helps enterprises provide services for other enterprises looking to employ this innovative technology. So investors are asking me if they should buy Palantir stock before it makes a huge investor update providing its quarterly financial results. I'll discuss those decisions in this video and provide you my answer for what I think about Palantir stock before earnings or after earnings.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So whenever I'm trying to make a decision whether or not to buy a stock before or after earnings, I always look to the previous quarter's results to see the direction the company is heading and to highlight some big picture items I need to look out for in the upcoming earnings release. Typically, companies will provide investors a forward guidance and what to expect in the upcoming quarter on some important metrics. So for Palantir, some of the biggest factors I'm looking to is the company's revenue growth. Now, in the most recent quarter, revenue increased by 48% year over year and 14% from the previous quarter, up to $1 billion. That's just a quarterly revenue. Now, for Palantir, revenue growth is even more important because the company's profit margins are so excellent. So when the company increases revenue, its profits go up by typically a larger percentage than its revenue goes up because it's a software as a service business model and its costs stay relatively flat. So when the revenue increases, the costs stay the same. And so there becomes a growing gap between revenue and cost, and the profits continue expanding. Now, something that's slowing down that trend is Palantir is reaching its limits in terms of how many customers it can serve with its existing employee count. Palantir told investors that for 2025, it's looking to hire many more individuals so that it can capitalize on this phenomenal growth opportunity ahead. And believe me, it does have a phenomenal growth opportunity ahead. I'm going to tick off some metrics that are absolutely excellent for Palantir. First of all, the company closed a record-setting $2.27 billion of total contract value in the most recently completed quarter. That's up 140% year over year. Now, a company like Palantir, when they sign a new contract, that doesn't go into revenue immediately. It goes into that metric there where I just shared with you the total contract value, and then it goes into remaining performance obligations, and then it turns into revenue as Palantir performs the service. Because sometimes it'll sign a 5-year deal. And so let's say it's a 5-year, $5 billion deal. It can't say that it made $5 billion in revenue because it hasn't actually earned that revenue just yet. It contracted to serve that customer over a 5-year period, and this is how much they're going to get paid over that 5-year period. So the U.S. generally accepted accounting principles allows Palantir to recognize revenue as it performs the service. So if it's $5 billion over 5 years, that's $1 billion every year or $250 million every quarter that it can recognize as revenue as it serves whatever it was that it contracted for with that customer. That's why these figures of total contract value committed during a quarter and remaining performance obligations are so important for investors because it indicates what Palantir's revenue growth will look like in the upcoming quarters and upcoming years. And their contract signings and new orders and remaining performance obligations are all increasing so rapidly, well ahead of the company's current revenue growth rate. So it's providing this lift in their revenue growth, and that's what has Palantir stock investors so excited. Particularly in US remaining deal value, that category is growing nicely, and enterprise deal value is growing very nicely overall. In the US, remaining deal value of $2.79 billion was up 145% and 20% quarter over quarter. I've always known that Palantir has had great relationships with U.S. government institutions, and they've always felt that Palantir provides them good value for the price they charge. But what's difficult for Palantir is to gain adoption with U.S. business because businesses don't have as large budgets as government institutions do. And so they can't afford Palantir services, even if they agree that Palantir is best in class. And even if they agree that Palantir provides great value, they just don't have the money to be able to afford Palantir services. Only the largest businesses have enough money to afford Palantir services. And you can see this, you can see evidence of this by looking at Palantir's customer count. They don't have very many customers compared to other companies that have revenue at this scale. They have relatively few customers. And so there's an opportunity for Palantir to expand more significantly into enterprises as it makes its service more affordable to these enterprises. And it can do that in a few ways. Number one, it can lower its cost to deliver the service internally, being able to deploy its services at a lower cost and therefore be able to charge customers lower prices and still generate attractive profit margins. Another way Palantir can adopt more business customers is by demonstrating to businesses the value they provide and convincing them that they are worth the price that they're charging. And in that way, businesses will find ways to expand their budget for these kinds of services and still hire Palantir. They'll find a way to afford Palantir services either by borrowing money or making some kind of arrangement with Palantir. They'll get creative to try and hire Palantir because they are so convinced about the value that Palantir provides. And as I mentioned, a very profitable business, cash flow from operations of 539 million in the most recently completed quarter, representing a 54% CFO to sales margin, which is excellent, almost the best of any of the companies that I'm following. And I follow almost 300 companies. So across the board, excellent metrics from Palantir. And the balance sheet is absolutely pristine, $6 billion in cash and zero debt. Looking ahead, Palantir is forecasting revenue of around 1.08 billion, but that's not going to be the biggest number for investors to look out for. The bigger numbers for investors to look out for are the ones I just highlighted earlier. US commercial deal value remaining. That's a big number for investors to keep an eye out for. And the total contract value signed during the quarter. That's the other metric that investors need to look out for because these indicate what the company's revenue will look like in upcoming quarters and upcoming years. Investors are already relatively sure about what revenue number Palantir will report, and so they're looking ahead to future quarters and future years. Now, all that being said about Palantir being an absolutely excellent business is no secret to anyone in the stock market. If anything, all of these excellent metrics that I highlighted for Palantir, investors are even more optimistic about the company than even the numbers indicate. Now, let me share you some evidence of that. Intrinsic value per share I calculated for Palantir stock is $50. The current market price is $190. So the market price for Palantir stock is more than 3 times the value I calculated as a fair value for Palantir stock, which is evidence of what I suggested earlier, that Palantir's success is no secret to anyone. Nearly all investors are aware of Palantir, and in my opinion, they are overestimating the company's value. Even though the value is great, they're even overestimating it, right? And then I'll share with you another data point. Palantir's forward price to earnings ratio is 256, the highest it's been going all the way back to January of 2024. And this is about 10 times the value of the average stock in the S&P 500. So it's trading 10 times as much as a random stock in the S&P 500. Of course, it's a much better business than the average stock in the S&P 500, but I don't think it's 10 times better than the average stock in the S&P 500. Furthermore, my discounted cash flow valuation also suggests that Palantir stock is overvalued. So to answer the question, should you buy Palantir stock ahead of these earnings results? I would say no. I would say there is big risk to the downside here. Should Palantir report anything with a question mark, the stock price could fall by 20, 30, 40% easily because it's trading at such a super premium valuation. It needs to report every single quarter almost to perfection. Otherwise, the stock price could fall by 20, 30, or 40%, maybe even more. And then to the upside, I think there's limits to the upside because it's already trading at such an expensive valuation that investors are already accounting for the fact that Palantir is going to deliver these excellent performance figures going ahead. So this is one where I think it would be a lot more prudent to wait until after the financial numbers come out. And then if you still want to buy, I understand it's a great company. If you're willing to pay a super premium price for a great company, I understand. I wouldn't do it, but I understand if you want to do it. But to be more prudent, to limit your downside, I would wait until the earnings come out, digest those figures, and then if you're still really excited about Palantir, you can go ahead and buy after those results. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.